Hello and welcome to the FinTech Finance Virtual Arena. I'm your host, Chloe Butler, and today we are taking a deep dive into the cost of a failed payment. Joining me today, we have Dalbir Sahota from LexisNexis and Tristan Blampied from Silicon Valley Bank.
Hi everyone, I'm Dalbir Sahota. I'm the head of product for Bankers Almanac KYC and payments here at LexisNexis Risk Solutions.
Fantastic. And Tristan?
Hi, I'm Tristan Blampied, Director of Payments Product Management at Silicon Valley Bank UK.
Brilliant. Now guys, the payments industry has advanced at an unprecedented rate as a result of the pandemic. Has the pandemic increased the customer demand when it comes to their payments experience?
Sure, I think naturally in terms of demand for payments and digital payments, there's been an explosion as a result of the pandemic, moving from very much cashless to digital payments. And I think naturally we've seen a trend where as growth happens in payments, there is a growth in failed payments. And some of the survey that we're going to talk about shortly underpins some of the increased and failed payment rates that we're seeing in the marketplace.
And have these new customer demands increased the cost of a failed payment?
So that the tolerance levels for delays just went down. So as a result, it was necessary to really look at every avenue possible to validate payments up front, to prevent failures, to prevent delays, to prevent scenarios where a business is not receiving its revenues, its incoming funds when it needs to.
Brilliant. So if we were to break it down, for those who may not know, in its most simplest terms, what is a failed payment?
A failed payment is I'm trying to send money from place A to place B, and in that journey it doesn't reach its destination. So it doesn't get to the final beneficiary. So if I'm sending money to you, it hasn't reached you. That in essence is a failed payment. And there's many reasons why a failed payment emerges and gets created. And some of the aspects of the survey, what we found is many of the failures are around data and imperfect data within a payment instruction. So the account number being an inherent key attribute where if the account number is not right and the routing code number is not right and the data around the payment is not right, it's not going to reach its final destination.
And so what causes a failed payment in 2021? Surely everything is automated now.
You'd think. However, there's many institutions out there, financial institutions, corporate institutions. From our survey, we can see approximately around a third of payments still being manually checked, manually administered. So, if it's manually done, there's always that chance of something going wrong. And that's what leads to some of these failed payments that we're seeing in the marketplace. Just to put in context, last year from our survey, what we've learned is there was around $118 billion associated cost to failed payments in the marketplace, which is a phenomenal amount of money.
Making a payment is ubiquitous. So are there examples where different countries have managed to reduce the amount of failed payments that they may have been incurring?
Well, I think first we should make the distinguishment between domestic payments and international payments. Domestic in-country payments, although we can't say they don't see failures, they are much less likely to fail because there are far fewer variables in them. Therefore, they are more highly likely to automate. The automation rates of pure domestic payments should be at least in the high 90s, and if they're not, then there's a fundamental problem there. When we start to then talk about cross-border payments, this is where the automation rate and the failure rate starts to reduce because there are far more variables and different pieces of information that must be contained in a payment instruction when it is travelling from one jurisdiction to another. For example, when making certain payments to certain countries, you might need to put a purpose code or a reason code for that payment in order for it to meet local regulatory restrictions. Where that is not a universal rule, a lot of corporates, a lot of companies won't necessarily know when to apply a reason code and when not to. As a result, the payment will fail if it's not there. I think a good example of improvements is with the SEPA payments here in Europe. what happened was a harmonised standard using ISO 20022 messaging has been rolled out for SEPA payments for the countries that are part of that, meaning that there is one ubiquitous standard. So if you're paying from Germany to France, for example, you know exactly what those standards are, you know what information you need to place in the payment in order to conform to the SEPA rulebook. So certainly in Europe that has had a very positive impact in terms of reducing the amount of failed payments and improving automation.
Beyond the loss of funds, what are the additional costs of a failed payment?
The biggest cost for the processors would be the manual work, so operators trying to repair that payment instruction. Obviously there's a human labour cost to that. Then there's the notification process. That could be a manual notification back to the originator that the payment has failed. You might need to build some expensive bespoke reporting mechanisms to produce lists of failed payment reports, and within that you would need to stipulate the reason why they failed as well. So it's really about notification and manual human error. And then of course not forgetting the customer relationship and revenue impact from that. If you've got a customer or customers with lots of failed payments, they're not going to be happy and they're highly likely to take their business elsewhere. As we know, payments in particular is very competitive at the moment. There are lots and lots of different options available for payment providers, not just banks anymore.
And so Dal, Tristan's obviously mentioned there a bit about the additional costs when it comes to a failed payment. Do these also affect different organisations in different ways?
Yeah, it's touched upon the cost side of the failed payments. You know, from our survey, what we've seen there, I told you about the macro number, but just going a little bit deeper into a couple of client types. So for banks, what we're seeing, the average cost to be around $360,000 a year in failed payment costs. For corporates, it's around $220,000 per year on average. And there's some outliers depending on the size of institution that occurs. But one of the most interesting things I found in the survey was 60% of our respondents stated back to us that failed payments had actually led to a customer leaving. You know, the customer churn problem that gets associated to failed payments is probably the most gravest aspect and consequence of a failed payment. And you know, any business doesn't want its customers to leave. And I think just around the points Tristan touched upon around domestic payments and cross-border payments, I think you know the aspect of what we've achieved and the market's achieved in domestic payments is really, really strong. It's almost a case of mirroring that in the cross-border, because fundamentally we do operate in a global world, ever so much so more than ever before. So supply chains, companies across borders are relying on payments to be made right first time. And in this sort of pandemic, and Tristan touched upon it there, that many institutions have suffered because of the pandemic. Certain sectors have really suffered hard, and their cash flows are dependent on a payment being successful. A payment doesn't reach its destination right first time. It has a consequence to its cash flow and its underlying business performance.
And what would you say the biggest challenges financial institutions are facing in 2021?
I think that aspect of just that growth of wanting to get more digital, businesses using more e-commerce channels to do business. Some have, been on that journey for some time, but the growth of their business to e-channels and more digital has been phenomenal because of the pandemic. And whilst a digitalised payment is a great way to get from cash to pure digital, in terms of the implementation around that, if you haven't solved for some of the aspects that we talked about in terms of what causes a failed payment, like an account number not being right, manually having to check the payment instruction, if you haven't digitalised that and automated that, you're going to still have a consequence of a failed payment. So I think that's been part of the challenge that whilst some businesses have gone digital overnight and have grown their channels to be digital, the underlying problems have still been challenging for them, and they're having to address those over the last year.
And so Tristan, what would you say some of the solutions are that would help tackle these challenges?
Sure. So there's quite a lot of solutions available to help improve the automation of payments, reduce failures, and basically increase straight-through processing STP rates. So what is already quite commonplace in financial institutions is some fairly neat rule-based type processing where, let's say, there's one field in a payment message which is missing. They can write predefined rules to ascertain that it's missing in the payment and automatically add it in. That's great from a customer experience perspective because it means that an otherwise failed payment will now automate, and it's great from a kind of operational perspective because there's no manual intervention in the payment there. So that's been in place for quite some time. What we're now seeing is the addition of artificial intelligence to further automate that failed payment process and basically repair instructions that have multiple layers of issues within them. Rule-based processing is okay, but there's only so far it's going to be able to go. So natural language processing, for example, can effectively assign a value to every piece of information within the message and achieve a contextual understanding of what that payment is, who it's from, where it's going to, and what it's for. As a result, using natural language processing or NLP, the system can effectively repair 3, 4, 5 different errors within the payment, structure it correctly before it's then sent on through the correspondent banking chain and to the beneficiary banks. Now that's really quite amazing because in the past, rule-based processing could only repair so much in a payment, but with natural language processing you can really get to the next level of payments automation. Similarly, machine learning is very valuable in payments processing. One example of where that can help is it can look at payment repair tasks that human operators have undertaken and learn from those repairs, so that in future, when payments come in with those same errors that had to be repaired by the humans, the system has built a model so that it can repair those payments. Therefore, the items no longer have to go via human intervention. Automation is increased, and I would also argue that fraud and risk is reduced because you don't want humans having access to payment instructions. It should be an automated process. And then the most important thing, of course, is that the customer then enjoys better automation. They're getting their inflows and their cash in on time when they need it, as Dal alluded to before.
So Dal, you've been telling us a bit about the survey that LexisNexis put together all around the cost of a failed payment. Can you tell me a bit more about that?
So the survey, in essence, was part and parcel of our DNA as a company. We like to get close to our customers, immerse ourselves in the challenges and the problems that they have. And really it's part of our design thinking, it's part of our product management disciplines that we have. And equally, we like to understand the problems, get immersed into them so we can really look to solve for those problems. And in doing so, we have a level of innovation in our product suite to cater for customer problems. So in terms of that design thinking and marrying that with the solution that the customer needs, that's part and parcel of what we do on a day-to-day basis. This survey is just one way to get closer to our customers, getting a very analytical view of some of their pain points in terms of their day-to-day worlds. And I think larger parts of it still sits around getting that data right, and that's still a theme that's coming through from our clients within the survey. And I think aspects of that Tristan touched upon, that customer experience, to enable the customer to feel that it's a very seamless process to ingest a payment, to make a payment, that is super critical. And that's part and parcel of what we've seen in our survey, that 60% of customers who respond to say customers have left because of a bad experience just centres around the need to be having a seamless customer experience. It's a hygiene factor in essence. The end outcome to have that payment process right first time and have it that straight through processing for sort of high volume businesses that are dealing with high volume payments or high value payments, again, super critical because it's the bedrock of their businesses. I think some of the undefined costs or the unknown costs to failed payments, the 118 billion that I mentioned, the unknown costs are things like what Tristan touched upon. So 1% drop in straight through processing causes blood, sweat, headaches and tears for actors involved in the entire value chain of a payment, from the originator to the beneficiary to the folks that have to actually manually manage all the interactions to get it right. These are all unknown costs. So whilst we know a macro number around the cost of failed payments, there is this unknown cost associated to failed payments, and that centres around the pain points that financial institutions are feeling to get these payments right, but equally that end customer pain point, that's still very, 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 very real in the marketplace.
So this is a question I'd like to get an answer from both of you. So firstly, I'll go over to Dal. What would be the advice you would give to the industry moving forwards to alleviate the cost of a failed payment?
Fundamentally, investment for today and investment for tomorrow. So not just looking at the problems that you have here and now, but predicting what's coming down the line. So investments in what Tristan mentioned, AI. So that is an evolution of how to manage failed payments coming down the track. But there's some low-hanging fruit. So the investment in today, in terms of understanding what data points are causing your failed payments, addressing those, making that customer journey very, very seamless. The demand for faster payments, competitive price payments, they're still key demands. They're hygiene factors out in the market. And moving that experience, not just from domestic payments to cross-border, very, very critical as well. So investment today, solving for today's problems, but having that foresight of what's coming down the track and ensuring you've got investments in place for the future.
Fantastic. And Tristan?
I would say automation, and deploying the technologies that can support that, such as artificial intelligence. I'd also say that the adoption globally of ISO 20022 messaging and harmonising the interpretation of that standard is absolutely key. There are proven success cases where that has already happened, such as here in Europe for SEPA, but there is further to go. If a harmonised and uniform standard is used globally by every country, then the rate of failure will reduce and the automation level will increase, and customers will be happier because they're receiving their money as intended and on time.
Brilliant, that's great. Well, thank you so much for joining us on the show today, guys. It's been lovely speaking to you, and looking forward to catching you next time.
Thanks, Chloe. Really appreciate you having us too.
Thank you, it's been a pleasure.
Thanks, guys, and thank you to the rest of our viewers. You can find out more on the Virtual Arena series and everything else on our website, ffnews.com. See you later.